All right. So here's a checklist, you guys. Just a simple thing you can go through. Number one, the most important thing is what strategy are you using? Okay. Are we day trading? Are we swing trading? Is this a midterm? Is this a leap? Are we shooting way, way out? You have to know what type of trade you are taking before even thinking about what contract to play. Okay. So this is the most important thing. Know what you're taking. Is this a day trade? Really, what I'm going to be talking about here, guys, is simply day trades and swing trades. I'm not going into midterm. I'm not going into leaps. It's a totally different strategy. That's much more advanced. We just want to keep this very simple, very basic. Number two, know your realistic targets and the timeline of how long it's going to take for you to hit those. Okay. So what I mean by that is if we are in a day trade and our target is, let's say we're trading AMC and we get in at 15 and our first target is 16 and we're expecting it to hit 16, within the day. That's a realistic target with a realistic time frame. Okay. Now, let's say we take a long-term swing trade or a bigger picture swing trade and we're entering AMC at 15 and our first target is 25. How long is it going to take to get there? We have no idea. That doesn't count. Okay. You need to know how long it's going to take or roughly how long you could expect it to take, as well as your targets. Okay. This is where I'm going to start looking for my strike prices is my first target. Almost always. This is how I pick my targets. Okay. We need liquid volume and open interest. So let's say 500 volume and 1K interest minimum. And ideally it should be more than that, guys. Okay. Volume is how many contracts have been traded that day. Open interest is how many contracts are still open from the however long. Okay. If the contracts expire Friday, open interest is accumulation of all those contracts that have been put on up until that point that are still open. Okay. Volume is strictly intraday. So we want over 500 volume, over 1K open interest. For day trades, guys, we're always trading the weekly expirations or the closest expiration I can have. The SPY and Qs and some of your other ETFs actually have contracts that expire Monday, Wednesday, Friday. I'll trade, if it's Monday, I'm trading Monday's expiration. If it's Tuesday, I'm trading Wednesday's expiration. Okay. I'm trading the closest expiration I possibly can when day trading. Why? Because that's going to give you the best chance for the biggest move for the lowest amount of premium on those contracts. Okay. For swing trades, I normally am going out to the following month. So if it's January, I'm going to play the February monthly expirations. And I'll go in and explain this here in a second. Okay. The reason I do this is when I'm in a swing trade, I don't know how long it's going to take. And so I don't want decay to become a factor in, again, I could still be right, but if it takes too long, decay eats it up. Again, I have nothing left. So finally, delta, aim for 0.25 to 0.45. Ideally, honestly, 0.25 is probably too low. Okay. Go shoot for higher than that, guys. Go like 0.35 to 0.45 when possible, or somewhere in that range. 0.25 is a little low for that. Okay. This one's going to hurt. Stop trading options on stocks with such high implied volatility. I know we all want to trade Tesla and Amazon and Google. Well, Amazon not anymore after the split. Google's split's coming up. Maybe that one will come down. Yes, there's a ton of money to be made here. And if you have risk that is, let's just say, over $300 per trade, then absolutely feel free and go ahead and trade Tesla. But if you do not have risk and are not comfortable with a risk tolerance of over $300 losing on every trade minimum, okay, I'm saying minimums here. Stop messing around with Tesla and all these other big high IV things, okay? It's not worth it. It's not worth it. It's literally the most common thing I get asked is, hey, I blew my account up. Why? Well, I traded Tesla a bunch. Okay. Focus on stuff that's simpler to trade. Focus on stuff that you can control your risk better on. Focus on stuff that you can get much more bang for your buck because they have closer to the money. You don't have to trade so far out of the money to just get reasonable contracts. Focus on the SPY, focus on triple Qs, and then focus on, relative strength or relative weakness on names under $300. AMD, NVIDIA, Facebook, SQ, Coin, PayPal, things like that, guys. Those are really easy to trade. You can control your risk. Boeing is another one. Again, you can control your risk. That's the biggest thing. When there's time, certain times there is plays to be had on like a Tesla. Okay. It's normally, even for me, like I like trading Tesla later in the week, normally Wednesday through Friday, because they get cheaper. I can control my risk a little bit better. Okay. And then finally, how to use option strat. I'm going to go over this. Okay. This is how I size my swings. I'm going to pull this stuff up right now. So I'm going to go over, guys, two things here. I'm going to go over first is choosing contracts and what they look like in here. So let's just go. All right. So you can see here, this is what we have. There's weekly, monthlies. Monthlies are the ones that are not weekly. It's that simple. Okay. These are monthlies. Each month has expiration for that month, July, August. Let's go to one that is a little bit simple. We'll go to AMC here. Okay. So you can see here, AMC, this is how most of them are set up. This is your expiration. These are monthlies, weeklies, monthlies. Okay. So when I'm day trading, guys, I'm always playing the highest one. It's that simple. If I wanted to trade AMC today, it's July 12th, I'm trading July 15th expiration. Why? Because I can get the biggest moves for the lowest amount of premium. Now, if I wanted to swing trade this, I would go out to the closest monthly, August 19th. I'm trading these. Why? Because these get more volume. These weekly ones will not build up volume most times. So they become tough to trade on weeklies. When I'm swing trading, I want to go to the closest month. Okay, so let's just say Mara here, for example. Right, so here's your weeklies. If I wanted to day trade, I'd trade these, but if I wanted to swing trade, I go to the next closest monthly. Why? Again, you can see how much volume these have built up compared to this one. So same contracts have 1,500 open interest. These have 10,000. So when swing trading, always go to the next monthly. When day trading, I always want to be, closest. So let's go to the Qs here. Again, you can see the Qs have Monday, Wednesday, Friday expirations. So I'm always trading the closest expiration on the Qs and the SPY. Okay, so let's say I want to day trade this. Again, then what am I looking for? I want to trade between 0.35 and 0.45 delta. So what does that put me? Let's say I wanted to trade calls at this situation. I would trade somewhere from 288 to 290. Anywhere in there, I'd be happy with. Same thing goes for puts. Okay. We have plenty of open interest and we have plenty of volume. This isn't an issue. You never have to worry about volume and open interest when trading the triple Qs. Okay. I'm going to always trade just barely out of the money or right at the money. Okay. I'm never trading in the money. I'm always right at or right out. You just get a bigger move. Okay. It's just that simple. If I think I'm going to be right, then, I want to take that chance so I can get that bigger move and capture that bigger premium jump. So again, guys, when day trading, I'm trading the closest expiration. When swing trading, I'm going out to the next month. I really want to focus on things that have good high volume, high open interest, and then delta somewhere between 0.35 and 0.45, 0.3 to 0.45, anywhere in that range, you're going to be really good. You don't have to worry about decay a ton. All right. And then last thing here, what I wanted to do was go over option strat. And again, guys, this is what I use to size my swings. Okay, so let's just say I wanted to take a swing here. We're going to go Mara. Let's say I wanted to swing the monthlies or the 19th and I wanted to go to the 10th. Okay, I'm going to pick my entry and my exits based off the actual stock price. And then I want to go to contract value. Okay, so let's say here I was going to buy this break of $8 and I was going to risk 720. Well, when I 82 cents is going to be what the price when I buy. And then this accounts for decay for us. Okay. Because so often we can't size for decay. And then what I want to do is go a couple days out, because normally when I stop out, I'm going to stop out within the first few days. Okay. So how do I size? 82 cents minus, let's just say 708 here, whatever this one is pulled up. I'm going to go 2 days out, 46 cents. Okay. How do I size? I have 82 minus 46. That difference, that's my risk per contract. Okay. And then I'm just using this. This is how I determine my entry. And then you can see also, like, give yourself profit targets, right? Like, you can give yourself more chart range here. So let's say tomorrow, was to get to $9. Okay. What if that hits, next week or this week? What is the price going to be? So I'm using this, guys, to size my swings and account for decay. So again, I'm finding my entry based off of the stock price. And let's say I'm buying over X dollar amount on the stock chart. That's my entry. What am I risking to? And then I'll go a few days, 2 to 3 days out to the right and account for decay, just to, to make sure that I am accounting for decay and I don't want to get beat up that way. So again, guys, if you have any questions at all on any of this, reach out, let us know. But again, there is nothing more important in options trading than being in the correct contract with the correct expiration and the correct strike price.